Okay, good morning, everyone, and welcome to this intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 13th. Great to be with you guys in the room. DJ, Iman, Jay, Kamal, Peter. Always a pleasure to be with you guys this morning. So, Pete, I got your request. Iman, great to see you again. Good morning. I got your request on the SPX. We'll take a look at that for sure. On the menu for today, as always, DXY, Euro, Dollar, CAD, Gold, right at that major critical level. I mean, gold is at a really big juncture right now, so keep an eye on that. Crude, Aussie, we'll touch base on Swissy, which is making another move here, and Dollar, Yen. Any other questions or trade setups you'd like to review? As always, throw them on the message board at any time. Let's jump right in. All right, so just ahead of the thing, just ahead of the start here, we did get some weaker than expected sentiment indexes from the zoo surveys in Germany and the Eurozone coming in well below market expectations. You're seeing some weight on that now, but Euro is still poised to make a topside breach, or at least attempt of that slope we're watching. So before we get into Euro, here's DXY. First things first, weekly chart, nothing to update here. I'm assuming most of you are in the morning webinar with me on Daily FX on Mondays. So we kind of went through this at length. 97.87 is the immediate resistance level, 96.60 support, critical support, 96.14, that's the yearly open. It's a critical range, right? Up against uptrend resistance. So the downside should have limited expectations until we break some form of uptrend support. Now look, at this point, there's a couple of slopes I'm looking here. I'm going to clean this up. We're going to drop this slope here, which was a really sharp one. We were working off the June low. Still looking at this one. This is the 2018 slope, just off the yearly lows. They see here in red. Now, there was a bad tick on Friday. I'm not sure what the deal was. Some platforms are showing it, some aren't. But we did get that spillover. Look, at the end of the day, this is what we're testing right now. Yesterday, we closed just below it. 97.44 is the 38.2 of the yearly range. Then you have that high day close from the early July opening range, 97.50, a nice pivot. We've been straddling it, okay? Dismiss this one here from Friday, but the daily chart has been straddling it. Key resistance, pretty clean. 2018 highs, 97.71. And again, there's that 97.87 critical level we were talking about on the weekly chart. So the levels are really well defined. The problem is, where's the momentum? You know, we can't seem like the daily momentum has been flat. Intraday momentum has been flat. We're looking for some sort of directional guidance here. Look, at the end of the day, like I said, I'm not even using that stretch low. A retracement just off the high to the low that we set back on the 5th puts a 38.2 in line with that 25% line on the slope. So that's going to be your near-term resistance. Again, 97.87 comes up. So that's kind of your top side of the range. At the end of the day, we're setting just a basic weekly opening range. Looks like we're defending it here. So look, I don't like to see these types of what's the word I want to say? Breaks, right? We always talk about the fact that when we see a slope break, a median line break, a trend line break of significance, we want to see something like this: acceleration, rip through, cascade effect, where all those stops start getting pushed. New guys jumping in, you get the chasers, it gives you that extension. Same way on the downside break, which is why I kept on working with this slope here. Because every time that we've seen price come up into one of those levels, it's either been a break, a test, median line, breach, acceleration, breakdown, acceleration, breakdown of the median line, acceleration, test, test. So what the heck do you do with this? I think we need a little more patience on this. You do have all this event risk on tap. Obviously, we'll get look to see. Let me just take a quick look at what those CPI coming in at 0.3%. So CPI topping expectations year on year 1.8%. We're looking for 1.7 year on year core. So strip out food and energy comes in at 2.2 versus an expectation of 2.1. So the inflation figures actually are pretty decent. Whoop, sorry about that. Might keep things afloat a little bit here, but at the end of the day, you guys know the levels we're looking for. Ideal scenario. Again, this is just my humble opinion. you see this thing fail near either a stretch into the parallel resistance here, or even maybe a test of just the weekly opening range highs and then failure. That would be the ideal scenario for new exposure. If you're holding shorts, you kind of want to be, if you're anything north of 97.87, you want to have your stop against that high. If you're not, stop against the weekly high is kind of where I play it. Wouldn't want to get too aggressive on this, just because the nature of this break. If this was a legit break, it needs to accelerate today. Okay, it needs to accelerate today. 97.02 is the 618. Interestingly enough, that bad tick on Friday, whatever it was, that's exactly where it kind of bottomed out. The actual chart will give you a registered low at 97.03, but you get the picture, right? That's still the next downside target, 96.52, a little bit bigger of a 618 of the yearly range. So the levels are clean. The range is clean. There is zero momentum, okay? And there's all of this circulating headline risk. You flip through the financial publication channels and websites, as I usually do in the morning, just to get a feel for what's going on. You see everyone talking about the Hong Kong deal and what's going on with the protests there. Listen, the main thing, and again, I don't want to get all political or anything, but the main thing with that is the precedent, right? So a lot of people are saying that the U.S. needs to keep a hands-off approach just because, China could be gauging this as a way of really, let's just say it's something they want to tamp down, right? If Hong Kong can get as far as to, threaten, independence or revolution, what does that mean for the broader communist China? So we can get into a book and write about this. Massive miscalculations underway. Ty, I feel like me and you, brother, are on the same page with how we view this. I do agree, yeah. But again, from a trading standpoint, I can't let that filter into my day to day. If true risk off hits and we see gold continue to rip, markets continue to tank, and treasuries, guys, I know you've probably been seeing the headlines on this, but I just wanted to bring up this chart today because I don't know if you guys remember, we've been looking at this same chart literally since like mid 2018. This thing was ripping into the highs. We were targeting 328, 332. I wrote about it on multiple financial publications, even aside from Daily Effects. We registered a high just short of that. Okay, the high came in at like 324, and we sat there for a couple of weeks before turning over. The trend line break shifted our focus lower. We added this pitchfork, and these are the levels that we were essentially looking for this year. The break in May challenged and broke the multi-year upslope from 2012, 2016. And look at the result. Look at the result. And it's the perfect example of what we just said. With the break of these median lines or these slopes should see a pretty strong reaction, a pretty strong acceleration in price, and even on a closed basis, it's been a crazy dump. So what does this mean? You're seeing gold rally, you're seeing treasuries rally, i.e. yields lower, okay, lows that we haven't seen since 2016. If this is going to really filter in and stocks are going to fall off even harder, the dollar may catch a bid. And so that's why my inclinations here are very timid as far as getting too aggressive on trying to press the shorts. That said, it's got to accelerate today. It's got to accelerate today. And just to put things lightly, if we see some sort of bounce or this thing just gets tight and coils in even another day or so, then you're just setting up with a decent opening range. Opening range for the week gives you 97.30 low. You see the downside break, you got another 30 pips before you challenge that 97 handle. If things clear 97.87, stand aside. Okay, it's not going to be a pretty picture if that happens. I don't want to be anywhere short on the dollar, or at least versus the euro or the DXY in that scenario. Not our favorite scenario, but trading is an if-then proposition, right? So we have to have our levels lined up. All right, so that is DXY. Next up on tap, the implications for euro. Here's what euro looks like on the weekly. Still sitting in that key zone. We noted earlier in the week, 1265 is what I want to see on a closed basis from a daily standpoint to validate this whole dump below the multi-year slope support as sort of a false break scenario. And then that would shift your focus at least towards yearly downtrend resistance. That comes in even with the high we closed there at 1369. So basically like 1370. But the first sort of hurdle pivot is all the way here from like 1250 all the way to 1265. Look at the slope. And again, on a closed basis, this thing was ridiculous, right? That's sort of the level we need to beat. Just higher is at 618. We get through that, and I think you can start to poise for a little bit larger of an advance. Till that happens, you want to trim your expectations in 1265. Here's what the daily chart looks like on Euro. So here is downtrend resistance. This is a pitchfork off the yearly highs, January, June. This is the 618 line of that slope. You can see we've been turning just ahead of it. There's that upslope support, former upslope support right there. So like 1245s even, 1265s, that's 618 of the recent drop from June. That would open up at least 113. 113 is going to be that really nice pivot in price that we've been tracking for a couple of years. It's going to be the upper parallel for the formation that we're in right now. Again, levels are clean. Momentum, nada, right? Even though markets are selling off, even though the dollar is rallying, even though treasury yields are falling, right? So something's got to give here. Intraday charts look like this. So this upper parallel has been being tested now for the last 2 weeks, right? Here's that formation. This is a near-term pitchfork off the yearly highs, or excuse me, just off the highs that we made just recently in June and July. There's the upper parallel, resistance, 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 resistance to the early start of the week, challenging now, right? And now you have, it's only Tuesday, but if we fail here, you have a clear-cut weekly opening range into those last swing lows from last week. That's 1230. So 1265, that's the pop that'll get us through. It's going to clear downtrend resistance. At right now, heading into the U.S. Open at 9:30, if this fails, you're at the top of the range. It's not a time to get long. You want to choke up any longs stops that you have on any long positioning because at the end of the day, it's just the top end of the range. Ideal scenario, again, any type of weakness gets held by 1186. Look for that topside break, but if you're long, time to bring up your protection. If you're not long, you have to wait for some sort of pullback. Your conviction stop, even on a scalp, would be against 1182. So make sure you don't get caught trying to chase this one. But this is the implications for the euro. We're at resistance. We're at the range highs for the week. It's, if this gives out, great. We've got more to go. But we need to see that thing start to make a move here. And again, when we see the break, I want to see an accelerated move. I want to see something like this, right? I want to see something like this. I want to see something like this. Don't want to get sort of a meander in price. Any questions on euro or DXY at this point? Yeah, sure. Here, Ty. Here's the combo. Okay. Dollar CAD, number 3. So this thing just doesn't want to give it a rest. Here's the dollar CAD on the daily chart. Or on the weekly chart. The big level, I highlighted this weekly chart on Daily Effects yesterday. The big level is 33.55, 33.70. Okay. The question is, on the back of the 4-week advance, the way we reacted there last week and that utter failure to close back below this median line kind of had me looking for a little bit of an exhaustion trade pullback, and eventually you think you get the extension higher, but this thing couldn't even clear those late lows from last week. So here we are yet again. Weekly chart has you basically nowhere land, right? It's like 33.50, 70s resistance. You're far off that. Key support, we got the reaction there last month. That was that 30.50 level. into 29.70, kind of rebounded right off that. Was looking for a little bit deeper of a pullback here, but we're not getting it. Again, the only dollar rally trade, or I probably want to just say the strongest dollar rally trade, um, despite the weakness that we're seeing elsewhere in the majors, has been dollar CAD. This thing is insane. So here's the reversal. All I wanted to say here is that we're setting up the monthly opening range right above the monthly open. Those tend to be decent setups. Okay, those tend to be decent setups. So um, treat it as such. You know, we need the breaks up 3190, 3170s to validate a downside move. You're looking for a tag of the 618, the recent advance. On the upside, the high day close comes in right around 33, literally 33 handle, 3302. So we'll see how this reacts from a monthly standpoint, or from a daily chart standpoint rather. The month has just been a simple, I don't want to say contractionary range yet, but opening range is being set, right? A little bit more on the constructive path and momentum. Here's the intraday charts. So even the upslope that we were following, right? Remember last week we plowed through the top side of this, then we plowed right back below. That to me was a scream of a false um, a false break. So last night I highlighted 32.53 and 32.88, both levels of interest for possible exhaustion. You didn't get anything last night that even looked like exhaustion. So I don't think anyone here would have gotten faked out, hopefully. But I still think something could happen here. This is the 618 of the near-term decline. Here's what it looked like yesterday. So DXY levels are same, Euro levels are the same. Here's dollar CAD. Plowed through that 38.2. There's the 618. Perfect confluence with slope. Still could be a failure point. Okay, still could be a failure point. So I want to see how the US Open looks. There's really no CAD data on tap until I think Thursday. And even then, it's kind of a minor print. Look for reaction here. Look for reaction here. If we get through 33 and certainly the US market opens and we're settled above it, again, there's nothing to do on a scalp short at that point. You kind of just want to sit it out. If you're holding longs, your next topside levels are 33.55, the level that we just missed on this last extension last week. And again, remembering that the daily chart has that 33.55 level. That's right there. It's the whole range decline from May, 618. Also, the exact swing lows for the May calendar month, which the opening range there didn't break to the following month, and that obviously was a massive decline, but a pivot, 618, 33.56, 33.55. That's your next sort of threshold beyond this. For me, right now, I'm going to be watching this like a hawk into the US Open. Okay. Let's see how this pans out. Questions on dollar CAD? Going once, going twice. That is number 4. Gold. Here's the combo tie. Let me get you the 120 again. So, excuse me. Here's gold, and this is the level we were all talking about. So look, I will be putting out an update later here for Daily FX for their technical page as well. This is the same charts we've been following, guys. This is huge weekly resistance. 1526, 1522 is the bottom end of that range. It converges on the upper median line parallel for this formation extending from 2016, 2018 lows. Really nice moves along that 25% line, pivots on both ends. Median line pivot was a extraordinary, beautiful pullback. Breakout was a beautiful acceleration. the 75% line breakout, beautiful acceleration. Here's the upper parallel. Okay, here's the upper parallel. Watch the weekly close. Also, the broader formation from 2013, 2015 lows. Okay, this pitchfork also nice support on the lower parallel. The median line was kind of messy, but a parallel of that caught the highs in 2015, 2016. Here we are again. Watch the weekly close. If gold is going to pull back somewhat, find some sort of exhaustion, yeah, I don't want to say correction, but a relief, right, for the rally, this would be the spot. This would be the spot. If you're holding longs, definitely a region. I'd do something. I'd be taking a little off the table into 1526 for sure. Major critical support, bullish invalidation. We started the week talking about, or last week was 1433 was going to be our bullish inval. We can choke that up now to 1451. Again, not expecting necessarily a decline to that mass, but just quoting the levels. Okay, this is now bullish inval. And a breach beyond here. If we start to materialize daily closes above 1426, there is nothing. I have a soft target on the intraday chart, so I'll show you in a moment. But from the weekly chart, there's really nothing till 1586, and that's the 618, guys, of the drop from the record 2011 all-time highs. So man, this thing is at a big level, okay? Big level. And that's why I kept on saying yesterday, if you noted the note commentary in the report, I was just saying on the update, I have a feeling something's around the corner. Something's about to happen. Canaries are signing. Yeah, Ty, perfect. Well put, my friend. Dollar at support, euro at resistance, gold at a major critical resistance on the back of a what? This has got to be over 20% at this point. 19, well, it was 20 at the highs, but at this point, 19.3% in what, 11 bars, 11 weeks? Give me a break. That's basically all of last year's range already covered in just less than a quarter. That's big, guys. So if something's going to happen, this is the spot to look for it. 3 Chinese banks belly up with frozen repos. Ty, more fuel in the fire? Haven't read those updates yet, but interesting. Yeah, the China story is going to get big, guys, because this Hong Kong thing kind of puts the party there in China on the ropes. They don't want to seem weak. They're not going to want to cave in on the negotiations, especially with their hold on Hong Kong essentially being challenged at this point. It's kind of getting hit from all angles. So definitely an interesting environment that we're in right now. But any questions on gold? I mean, the weekly chart, you could probably trade just off this thing for the last like 5 months, I want to say, and you'd probably be okay. At that being said, red alert, 1522, 1526, red alert. Okay, here's the daily chart. Now, this is the 120, sorry about that. Here's the daily chart. Now, I do have a soft target at 1557 if we break higher from here on a study look back towards 2011, 2012, and 2013. You had multiple swing high spikes, no material daily closes. These were obviously the lows that we're following right now as resistance. But here's another spike low in February, and then the subsequent break in April did see acceleration. So 1555, 1558 here. Soft target, and then again 1585 is the big whopper. That's the 618. So momentum still overbought on the daily close basis, or on a daily basis rather. If we fail a daily close here, like I said, this is my spot for some sort of pullback. And guys, this daily chart doesn't even have the broader slope here that we're looking at. So put some whoops. Let's say we just copy this just for the sake of showing you here what it looks like. It's going to make the chart pretty messy, but there's your spot, man. This is huge. This is huge. Now, a confirmed break and close back below 1509, back below some of these swing highs with momentum back below 70. Okay, look lower. Look for just a near-term correction. Intraday chart looks like this. So if this is going to fake out, this would be a kind of a good way or an interesting way that you would imagine market participants actually getting faked out. Near-term upslope support resistance. This is just off the lows from July 9th and the last low that we made, or the first low that we made here in August. Decent median line action, decent median line action. You know, we were talking about the precarity of that move into the start of the week. Here's the breakout. You did get acceleration. 1509 to 1534 ain't no small move, okay? You did get acceleration of a resistance upslope breach, but lateral support is lateral support, lateral resistance is lateral resistance. Here's the initial reaction. Look for some further tell here. If you get a 2-hour close, again, 70 back below that overbought signal would be, on a close basis, would be encouraging. Anything you take, it needs to be just a couple off the high here. Don't get aggressive on it. Below 1509, you start to think a little bit more comfort with the idea of a near-term pullback in gold. It's counter trend trading any way you slice it, okay? But it's at a huge, huge resistance level here. And it's funny because it's just as the headlines and things are getting all like, oh my goodness, you know, Hong Kong shut down for a second day. There's still no deal on tariffs. You know, there's still no deal on tariffs. All this stuff's going down. Just the right time where markets are like, oh, buy gold. Things are going to be bad. That we're kind of at resistance. Actually, you might want to take a little off here. Remember, cautiously with the masses, boldly against. Okay. So that's my take here on gold. Any questions on this critical resistance barrier? Levels are well mapped out on this, guys. Just watch price action. Crude, number 5. So the crude trade is interesting because we came into here. So again, this is the gold targets from last night. Here's that key level. We're testing it now. No change to any levels that we highlighted last night. Here's crude. So the idea for crude is that, listen, we're at near-term resistance targets 55.21. 56 is sort of breakout. Okay, if we get beyond that, you're clearing downslope resistance. And it's been a pretty decent advance off the low. So again, sort of an exhaustion point of where I'd start to look for possible divergence, maybe a little bit of a spike high type of scenario. Here's crude oil on the weekly charts. The only thing I wanted to highlight here is this slope. Okay, this is the 38.2 of the range. It's been a pivot on break on both sides. On the breakdown in May, the ascent rally in June. Even last week as we collapsed, the lows held, that 618 held, and price held above that median line. Look on a closed basis. Looks like it didn't even break. Okay, so yeah, a little bit of upside for crude. Why not? The thing collapsed from key resistance. Maybe see a little bit of a support bounce before the next leg lower. That advance was coming into near-term resistance. Here's the daily chart. Not really as convincing here. You got the low, that low day close from back. I don't know why that's not on there. From back in July, 55.61, right? We're challenging a reversal back above this slope, which is a 3-point support touch. So it's a confirmed support slope. That was the 4th point break, accelerated. But what do we got? Key support. 618 retracement, 618 extension, former swing lows, channel support, right? A lot of these trades have done the same thing. Dollar cat, false break to the upside, come right back into slope, right? We're looking for validation on these moves. Here's the intraday for crude. So that level is still intact, guys. 55.21. You've been getting, it's pitiful divergence. I wouldn't even call it necessarily divergence, but there was a higher high registered in price. This level that you're looking at right here was simply last week's open, okay, which is not something you want to stress per se a couple of weeks later. But it also converged right on that upper parallel into the start of the week. So our focus was here Look for a reaction, 55.21. If it stretches, you still could get failure at 56, right? That's the opening range high. I wouldn't say the opening range high. I'm wrong about that. But on that last rebound, that's the highs that we made last week on the open before we broke lower, and that converges on this 138.2 slope. So even sometimes, guys, when you're looking at these pitchforks, when they offer decent pivots, right, and you see that market has been, in fact, respecting that slope, even on the top side break, a Fibonacci relationship or Fibonacci ratio may oftentimes give you that slope. So, we added that. It caught the highs here. It might have been a freak. Who knows? It worked, and that converges again on those highs. That's my breakout level. Okay, this is resistance. This is downslope resistance. So we're seeing if we can't get pullback from here. Near-term support 53.75. That's a basic slope off these lows. Basic pivot in price, former swing lows, break, instant resistance, a little bit of a sloppy test there early in the week. But if we get below that, 52, 58 would be the level you'd look for again. You know what I mean? For all intents and purposes, it's simply testing downtrend resistance here. Questions on crude oil from here? That is number 5. Cautiously looking for the pullback. I still think at that point you look for a bigger setback. Probably look to buy again and get a bigger breakout. This reversal off support was pretty massive. So I think you get a little bit more upslope here. First, looking for a decent pullback to get in. All right, that is crude. Aussie, number 6. Here's what Aussie looked like earlier this week. Okay, here's what the Sunday Open looked like. Or I guess this was the 8th of last week. We tested big support. That level, you all know, we were looking at was 67.33, 67.45. The reversal that we got there was spectacular. Okay, on a daily close basis, here's the daily chart. We closed well, well above that spot after, probing well below. You have downslope support there. You have a 1618 extension there. You have the actual stretch January washout low there. And is, support is support. So here we are. Divergence, it's a weak divergence signal, but it's divergence nonetheless. Here's a lower low in price. Here's a slightly higher low in the oscillator. One registered point below 30, one above, typically a decent signal. Now, the problem is that near-term price action just isn't giving you much to be confident about. So let me just take it back to the weekly chart for a moment here on Aussie 2. Okay, just to show you again, even on the longer term slope, basic trendline resistance from that high we made in June. Remember, that was the breakdown. We tested that same slope, former slope support, as resistance, continued lower. That high, 2-touch, if you want to call that a third, here's the third, here's the fourth. That same slope, extended off the yearly low we made in May, is right there. So what does this do here? Okay, your key resistance isn't until up here, like 68.50, 68.28, 2016 low, 2016 low week close. Nice little area of support there. We talked about this when it approached and rebounded in June. We played some nice longs on that. I was looking for the breakout here. We obviously got a definitive reversal right after, which kind of put the focus back on the downside. This is your next major support target. Now, again, similar to dollar CAD, but not really. Dollar CAD's already had 4 down up weeks. Aussie dollar is working on its 4th, where dollar CAD would be on its 5th right now. But that being said, not a bad point, not a bad exhaustion point if you're going to get some sort of recovery. And with the same respect, guys, if it breaks, it could be real bad. It could wash out pretty aggressively. Just from a slope standpoint, you have nothing to like 65s and change. So really cautious here, but it's a big level, okay? Again, we looked at the daily chart. Here's the intraday. And here are the levels that we looked at earlier in the last week. We failed just ahead of that 68.28, 68.32 target. Again, that 2016 low. That's a 38.2 of this most recent drop. Okay, we failed just ahead of this pullback now, right back at key support. Right back at key support. Do or die for Aussie here. Do or die for Aussie. And again, we do have, if I'm not mistaken, sorry, don't have my calendar in front of me. I feel like there's Aussie employment numbers on tap this week. Yeah, Thursday. Well, Thursday morning here in the U.S. I guess Wednesday night here in the U.S. Thursday morning in Australia, but maybe we'll get a play off that. We'll see. Anything that you take on the long side needs to be against this zone. On a stop basis, you kind of want it against that low, but that's still too far out for where we are right now for my blood. So we'll see if we can't get any triggers, anything to put us in against this area. If we gap below, if we break below and there's just a run, guys, don't touch it. At least not on the long side. If you find a decent entry on a rebound, maybe. But this is a big pivot zone. Big pivot zone. Same thing with gold. Same thing with euro. They're all doing the same thing, guys. Buckle up. Okay, buckle up. Dollar Swiss number 7. This one is making a move to the downside as well. Broke lateral support, but it's holding this slope. Here's dollar Swiss on the daily chart. I had this as a huge region and sort of major risk with a downside breaking close. Yesterday, we did close below. That level was 97.12, 97.16. The objective opening range lows for the year. The close lows for June. The 50% retracement of the 2018 rally and a parallel slope support of that high extended off that low is right there. So for all intents and purposes, if things are to continue on pace, you're bearish sub 97.16. Okay? You got that 50 line, that 25% line of the slope, which was perfect support, break accelerated, resistance, breach accelerated. Things got hairy here, but all of that now converges. Again, 97.16, 97.12. Downside, I'll show you in the near-term chart in a moment. There's some slope here as is, but from the daily chart perspective, you're looking for slope at this point somewhere around 96.20s. Next confluence region is going to be on that key 618 level. That's 95.88. What else was I looking at with this? Oh, the extension. Again, now this is a big assumption, but I'm trying to show you just how you want to map out these levels. And the 618 was right there. There it goes. I was looking at this earlier too. Right? So this could be another sort of initial downside target on the move here. If we continue lower, is going to be that 96.40 level. 96.42 is going to be a 618 extension of the decline. Point is, sub 97. I mean, you're in trouble. You're in trouble. Here's the intraday chart. Here's that critical level that we just highlighted that we've been looking at, 97.16, 97.12. We drove into it last week. The initial rebound looked good. That parallel held. I was looking for support here and the breach of this parallel to get this thing going. You got support here, and actually that ended up, would have been a nice long if you took it. I wasn't in it, but it would have been a nice long, right? And then here we are again. And then here we are again, dead cat bounce. Now we're buckling below. Tried to break back above, failed, and then another low. Now this slope, and believe it or not, this is all derived off of these two reference points. We got a third tag, gave us a breach, resistance, break, accelerated. On the downside move, we bounced there for a couple hours. The break accelerated, right? This parallel off the low for the same channel literally caught the low, top side resistance at that same parallel, that same channel resistance, failed. And then on this drag, when we dropped here again, I was like, man, this has got to be This has got to be the low, right? The spike that we're looking for. Didn't work. Here's the support bound, starting to get deader, starting to get deader, and here we are. So look, my point being is I don't really know how to play this from here. If you feel inclined to take sort of a recovery off this slope, don't even tag anything above 96, 97.16s. I'd look at these levels. Just jump out of that position. Uh, if we break lower from here, there's nothing until 95.88. I'm not going to sit 100 pips in the wrong trade. At the same time, a short from here, where's your stop? Are you going to throw it up at those highs? I'm not putting a 50 pip stop on this. So something to track, not so much as clear as dollar CAD, euro, Aussie, at major critical levels. This one already made a material daily close below yesterday. So in my eyes, this one's just, it's a simple bearish trade sub 97.16. Question is from here, do you get that recoil back into that region, or does this just completely collapse? This is like a, and again, this is now you're just playing with these retracements, mean nothing yet. So, but my point is, this is kind of a tracking setup. You don't want to get involved in this one just yet, but I definitely want to see how today's close materializes. Only a pushback above 97.16 on a close basis would have me tempting anything as far as even a swing trade from the long side. Questions on Swissy. Sort of a weird setup, but I just wanted to cover it because that major pivot that we were looking at, we are technically below it. Near-term slope dictates to watch out here. But if this rally fails at near 97, that might be the tell, again, that we're moving lower. And you know what? Let me add that 618 here, just for the sake of consistency. Okay, dollar Swissy. Last but not least, from the crosses, or from the majors, I want to say, is the abomination. Here's dollar yen. No surprise here. If risk off is going to continue to sort of pick up the pace, even if the dollar does catch a bid, don't remember yen status also holds some of that risk off flow. So look, we're at support. What else can I say about this? This is sort of the big region that we were looking at. Here's the dollar yen setup from the 6th. This was last week. We were talking about that May low at 105.55. Last week it was perfect because it converged right on that lower parallel. That's this. Okay, that's this. This is the 2 hour. Let me get you the 2 hour here. Right, that was this. Now on that decline, you made a massive outside day reversal. Looked really constructive. I was looking for a tag of 107.21, 107.60. We needed to see the break to validate resumption. It rallied as high as 107.09. Turned lower. There's that support bounce again. Didn't get much thrust on it. 106.30 held that time. Here we are where we closed last week. Here's the open of this week. And we simply pivoted below, and now we're testing it as resistance. That slope has me sketched out. Yesterday technically did close below. I didn't throw this on the update because I wasn't really quite sure what my opinion was at this point now that we did that. I hate when those closes are right around it. I like to use those as sort of a validation. But we always say we hate the break of these slopes that just mutter below. Usually these are kind of fake out slopes. So dollar yen has me again in the same slot as dollar Swiss. You kind of want to track this one over the next few hours, next day or so, to see how we react at these thresholds, because technically the acceleration right here should be to the downside. Momentum isn't oversold. Price closed below the parallel. This formation has been radically clean. Like radically clean. This thing never happens with dollar yen. It's the only reason I've been talking about it for the last few weeks, is because the price action has just been super clean. So what is this? Watch these next couple of days, next couple of hours, to be honest, for guidance here. Next lateral downside target is going to be that January washout low, and that's 104.65. If we get the continued close below. I'm of the mindset to just, watch for a near-term recovery here. Might be a better opportunity to sell from higher, but I don't like this mutter lower, and I just don't see it falling apart. I mean, it could if things turn real ugly on risk, more aggressively, sure, but I'm cautious here on dollar yen. Similar to dollar Swiss, they're both trades that you want to kind of gauge. At the end of the day, it's a very clean weekly opening range at a major slope support. So if you get the weekly opening range lower, great. You broke slope support anyway. We're heading lower, right? But if you break the weekly opening range, specifically the weekly open to the upside, well, you're at slope support, so you're already better positioned in the bigger trend to play a little bit of a recovery. So that's saying again, everything would be counter trend if you try to press the recovery here. So for me, I'm just kind of going to play this black and white objective. I want to see what the weekly opening range does, and we'll play it from there. Dollar yen, by the way, in the weekly chart, just to put things in perspective on the broader trend. This is just a basic slope off the highs, right? Nothing's changed there. Parallel. I don't know what you want to call that, but last week was the low. Things to consider on dollar yen. Okay, that is dollar yen, the abomination number 8, and that covers everything from my end except SPX. Pete, here's what I'm looking at, man. Here's number 9. Are you still in the room? Oh yeah, you are. Here you are. So this, dude, believe it or not, this is the same exact chart that we were talking about in the webinar last week on Thursday's webinar. This was a target that we were looking at. I think the market was heading here as we were in the webinar. 2930s, 2018 high day close, 618 of the recent decline from the highs that we made in July. Upper parallel, all that converged right there. We upshot that day by a little bit. We got as high as 2941, but that was the high. And the formation that we were looking at, well, this was the support structure that we had noted is like, okay, if we fail here, this is your bullish inval. Took a couple more days than expected, but the downside break of the slope did see price accelerate. And here's that 2868 level. And when you texted me early in the morning, Peter, ahead of the webinar, that's the level I was talking about. So it looks like you're getting a little bit of a hover here. Could see a little bit of a recovery into the US trade session. At the end of the day, you just broke up slope support back on the 13th or the 12th here. So where do we move from here? Here's the broader picture of what we're looking at for the SPX. Pete, this is the inflection zone, man. This is the zone that we were talking about on the way up, right? There's that key zone, 2865 into 2877, or 2863 rather, into 2877, right? Key zone, former swing highs, break, acceleration, support, break, acceleration, resistance, breach, acceleration on both sides. Here we are, right? Here we are. Now, if you take a quick retracement of the most near-term advance, the 618 comes in just lower at 2837. That'd be the downside break target if this does give out. What else was I looking at this morning? The extension. Okay, the extension, just wanted to highlight this, an extension just off this near-term high, gave us a 1618 at 2865. So that opens us up, a 2-point range here of support. The 100 did offer a decent pivot. I don't want to stretch it too much, but I would prefer to use that than the 50 at this point. So I'm just going to remove the 50 and kind of watch that level. And the only other thing that you'd want to see is some structure to the decline to kind of govern what we should expect on any type of recoveries. And I was looking at this, it's not the cleanest, okay? But seeing as how the last one held literally for like 4 days before it broke, I just wanted to throw this out here. So Pete, the median line, a little messy, maybe an overnight trade, but resistance, 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 resistance. If this breaches, look where the top side is. Whoops. Boom. All right. And then not to, complicate the heck out of this chart, but the retracement. And then this is a big assumption. I don't know that this is a low, but the point being is that the 618 comes in right at the same levels that we were watching, and the 38.2 comes in a little bit higher. So like here. So here, I mean, again, this is a 60-minute chart. I'm getting really granular with you guys, but just to kind of break down how I like to look at these, drops. It's pretty decent. The levels keep falling into these decent patterns on these moves. So I think it's something we should pay attention to. So Pete, does that help? Put a little flavor on it. These are the intraday targets I'd be looking at, basically heading to the US trade session. Peter says, yes, thank you, yes. Cheers, Peter. My pleasure, my man. I wish I always kick myself because these SPX setups we go over here in the webinar, they tend to play out pretty well, or have been at least for the last couple of weeks. And I just haven't been involved in them from my own personal trading standpoint, which is kind of lost in my point. But levels look pretty good. So all things held constant, 28.65, 28.68. If you see some sort of near-term recovery, guys, don't be all surprised. Markets will be like, oh, we're finally getting an update. The low is in. That doesn't materialize until we break through 28.95. If we breach the upper parallel, if we breach a basic 38.2, yeah, there's room for a much larger recovery. Until that happens, even a rally into this region still puts you within the confines of the decline. So things to take note of. All right. Well, that's everything I have on my end. Any other questions or trade setups before we wrap things up? Feel free to throw them on the message board now. Otherwise, don't forget, Jamie will be up with midweek strategy webinar tomorrow. We're trying those evening sessions, guys. Keep your eyes on the homepage. Jamie's been trying the evening sessions just to kind of get a feel for if we have more interest for, kind of spacing out the days, since we do the scalp webinars in the morning. Maybe an afternoon might get a little bit more, those guys on the West Coast, an opportunity to jump in as well. So we're always interested in hearing your feedback, but keep in mind that's tomorrow, and I'll be back on Thursday again at 8:30 for another update. Best of luck trading this week, guys, and I will see you on Thursday. Cheers.